Hey there, it's Tom Ryan, founder and CEO of ICR. Before we get into the next episode, I wanted to ask that you subscribe to the show. It'll help us get even more unique and interesting guests on the podcast and in turn continue to educate management teams and the growing ecosystem that creates value for fast-growing private and public companies. And while you're at it, head over to Apple Podcasts and leave us a 5-star rating. Very much appreciated.
As much as converts have become mainstream, and as you know, converts have been in existence in the U.S. capital markets for almost 2 centuries now. Nonetheless, equity investors need some hand-holding.
Issuing a convertible bond can be a great way for companies to raise capital, but issuance can be complex and daunting. And Raj Imteaz has made a career out of demystifying that process.
If we can run an efficient process for the capped call hedge and we improve pricing by 1%, which we oftentimes do, $1 billion deal, that's $10 million of value.
My name is Tom Ryan, and this is Welcome to the Arena, the ICR podcast. Each week, I sit down with today's business leaders to give you an inside scoop on some of America's most prosperous public companies, their origins, their challenges, and the keys to their success. Today, we're joined by Raj Imteaz, the managing partner and head of ICR Capital's Convertible and Equity Derivatives Advisory. He advises boards and management teams on structuring and executing convertible debt, convertible preferred and mandatory offering, structured sales, repurchases, cap calls and call spreads, hedging and monetization strategies, and warrant management solutions. During his career at ICR, Barclays and Lehman Brothers, Raj has worked on more than 200 convertible and equity derivative transactions totaling over $125 billion in deal value. Raj and his team's goal is to ensure that ICR clients received unbiased, custom-tailored advice, simplifying the convertible process for issuers and helping them achieve best-in-class deals easy and efficiently. Let's enter the arena with Raj Imteaz. You know, there's very few people who've been on twice. You're one of them. How does that feel? It must make you feel great. This could be your career pinnacle.
Feels awesome. And it's a great time to talk about converts given how busy the market has been and the momentum we've been having. So really appreciate you having me.
Yeah, of course. Well, look, we'll get to that in a minute, but remind people, what problem do you solve for with your advisory group? What makes it so valuable where bankers maybe are not enough?
Yeah, and I tell clients, Tom, that I think most bankers, they have the client's best interest at heart. So therefore, they are going to try their best to get a good deal to a client, but nonetheless, banks and financial institutions, there's a built-in conflict of interest. There are many parties that a bank tries to satisfy, and sales and trading team may have relationship with investors. So what we do is we become a part of a client's finance and treasury and accounting teams, an in-house, on-demand extension of their team, where our sole purpose for existence is to think about delivering the best outcome on a deal for that client. And what does that mean? That means bulletproofing documentation and structure. That means making sure that the client is getting the best convertible pricing, capped call pricing, taking care of accounting side of things, taking care of investor messaging by working with our investor relations teams. Every single piece of a convertible transaction on behalf of the client, we manage and optimize. And that means we save our clients time, which is very valuable for our clients who must not have enough hours in the day to take care of their day-to-day jobs. We save them a lot of money, and we make sure that they can sleep well at night.
Well, you mentioned money, and you mentioned it very casually, but we're talking about significant real money here. What is it about what you do helps companies save money? And maybe give an example of a size of a deal and maybe how much money you can save issuers.
Yeah, we're talking about tens of millions of dollars. And the reason for that is that the deals we do, even our smallest deals, are a couple $100 million in size. And then some of the deals are $1.5 billion to $2.5 billion. So think about the coupon. If on a deal we're able to, through our work on credit spread and volatility and valuation. And by working with our banking partners, we get to a slightly better coupon, let's say 1/8 of coupon, which is the smallest incremental improvement on a $1 billion deal. That's about $5 million of value.
Yeah.
If we can run an efficient process for the capped call hedge, and we improve pricing by 1%, which we oftentimes do, $1 billion deal, that's $10 million of value. So what we see when we're involved in a deal, we improve the economics of the deal in our client's favor by somewhere between 2 to 5% of the total deal size.
Yeah.
So it's a massive, massive number. And as you know, Tom, it has now become market standard that we get paid out of the overall banking fee.
Yep.
So then from a client's perspective, it's a very, very significant ROI on the fee paid to us.
Yeah. And then I think, when you talk about the need for what you do in the market, one last point, and you can elaborate on it. I would say even the most savvy CFOs, they don't do this every day. It's a very complex piece of paper. And even, the treasury teams and the CFO, why not have extra support, right?
Absolutely. And I'll tell you a fascinating story. So this is a couple years ago. We were in Southern California. We were meeting a client for the first time. So we told the CFO what we do. And at the end of the conversation, he said, "So Raj, if this is true, why doesn't everyone hire you guys?" And I said, actually, if you look at the evolution of convert advisory and market penetration, people are starting to hire more and more. And so this year, that market penetration, what percentage of all convertible deals have an advisor? That number is this year 66%.
Yeah.
So it was 10 years ago was, sub 10%. It was single digit percent.
I'm kind of in the PR business, right? So 66% rounds to 70. So let's call it 7 out of 10 and rising. You also mentioned briefly, Raj, working within our communications capabilities. And to remind listeners, ICR has, call it 1,000 clients. We're organized in industry groups. So we have people who spent their careers analyzing public energy companies, real estate, consumer, everything across the board. How does sitting in the middle of those communications and investor relations groups create a better outcome for clients?
The ICR platform is so powerful because what we bring in is the core expertise around everything related to a convertible and a derivatives transaction. But then if you think about other aspects of optimizing the transaction, how do you tell the story? How do you tell your equity investors about this transaction? Well, we work with our IR and PR teams to craft the right messaging. Which investors are important? Which research analysts are important? Educating those research analysts on various nuances of the deal, how to model the derivative hedge. Maybe a client is undercovered by Wall Street and they need to work with a number of banks on future coverage and research pickup. Well, which ones are the best in the industry and also easy to work with? Unless you have a real team like we have, maybe you can read some research and get some color, but you just don't have core expertise around it. So it's really powerful.
Another point of differentiation, I think, is ICR Capital itself, which not only covers converts, which you and your team do, but also IPOs, general equity, secondaries. Why is that platform so valuable when you go into a client? I assume you can kind of go in almost in an agnostic way, making sure that clients are best taken care of with whatever issuance they need, but you have all of the capabilities because, at the end of the day, while we have the convert or equity capabilities, we want to make sure that the client's capital structure is the most efficient and works best for them. Maybe comment on the platform as another point of differentiation for your converts practice.
Absolutely. And it's not only just ECM and equities. As you know, we have in-house expertise around private credit and revolvers. And so when we talk to a client, we're not pushing for a convertible. We want to solve their needs. We want to understand what their core objectives are and then address the needs and satisfy those objectives. And so sometimes clients are saying, look, walk me through whether I should be doing equity or convertible or both at the same time. We have one of those situations going on right now with our equity advisory team. There are a number of times, as you know, private credit is all the rage. So clients are saying, hey, can you run a process for private credit and tell me what the expected pricing would be versus doing a convertible or a convertible with a capped call? And that has happened a number of times in the last 18 months. We have done a number of revolver processes alongside convertibles. We have a couple going on right now.
Yep.
So we truly are thinking about what the client needs to be very successful in their business. And that's where we want to meet them and help them versus let's just pitch converts and try to get you to do a deal.
Raj has talked a lot about the need to provide unbiased advice to clients. I wanted him to elaborate on why ICR has been so well situated to do that and how that's impacted our ranking amongst convertible bond advisory groups.
So there are 4 or 5 advisors in the market. And Tom, I tell clients that even if they say that they will not hire ICR, we say that advisors add a lot of value. You should hire someone. But we do things very differently. And that's the team we have built, the platform we have, the services we provide to clients. It's just a whole generation away from everyone else. And that's why, Tom, when you hired me 4 or 5 years ago, I mean, we were the newest player in the convert advisory field.
Yep.
We did 0 deals at that time, even though I personally have done billions. And since then, this summer, we have advised on 10 deals. We have advised on 25% of all convertibles this summer in the US, 47% of all convertibles that had an advisor. So from number 5 out of 5 in the last 4 or 5 years, we have now moved to the number 1 spot. And look, depending on which quarter, which year, there's another very major player. The real change that has happened in the last few years is that all our competitors have kind of moved away from pure play advisory, and now they replace banks on deals as a book runner. And you will see that if you look at the press release on those deals. Perhaps the official title is placement agent, but it's really, for all intents and purposes, a book runner.
Yeah.
That causes a lot of the conflict of interest that we set out to avoid, that we're not a bank, we are an independent advisor. I also feel that that causes a lot of friction with banks when you are an advisor on a deal. And really, I mean, you shouldn't be one day you're a bank, the next you're an advisor. Pick a lane and then, do that. So we have chosen to be an independent advisor. We're the only real full service independent advisor there is in the country. It takes a lot of discipline to stick to your lane, and particularly when we have opportunities. We have had opportunities to replace banks and be a book runner on a deal and make $10 million, and we just voluntarily said no.
Yeah.
You should have your banking partners because you get credit from these banks or research and other services. We would like our advisory role at $1 million or $1.5 million, please, and not 10 million. And it just takes a lot of discipline to be able to say no to those opportunities.
To walk away, it's not easy.
Yeah. And we just decided that we will always be an advisor and never a bank. And we think it resonates with clients. It resonates with banking partners, people in the ecosystem. One of the reasons, not the only reason, but one of the reasons we're winning is this staying true to our original objective and game plan.
Couldn't agree more. Switching to the market, Raj. So the convert market has just exploded. What's changed in 25 versus 24? And why does right now feel like the perfect storm? I mean that in a good, positive way. Why is the market so ripe now for issuers to raise capital in this structure?
Yeah, Goldilocks moment is the phrase I use.
Okay, even better.
65 billion of issuance this year, expected to be close to 100 billion. And to put things in perspective for our listeners here, Tom, in a normal year, you have, call it 50, 60 billion issuance. If it's 30, 40, that's pretty anemic. 70, 80 billion is very good. And then 80 to 100 is when our spouses are really upset with us.
Right.
And we're approaching this year, annualized, that upper end of that 80 to 100. Why is that? I think it's, as you aptly said, it's a perfect storm in a positive way of all the ingredients of a good convertible market. So, what are those ingredients? If you look at risk free rates since the beginning of the year, risk free rates are down about 80 basis points. So, that means convert interest gets better. If you look at the equity markets at or near all-time highs after the volatility we saw in April, market has recovered very nicely. At the same time, the April volatility caused equity volatility to go up. So what does that mean? The option component of the convertible is more valuable in a convertible. So again, that's better coupon and conversion premium.
Yep.
And the last point I would mention, in the midst of CPI and FOMC and all these things, we kind of didn't really pay attention. If you look at credit spreads, this is the risk premium that credit investors are charging above the risk-free rates. If you look at the last 30 years of data, we're in the 94th, 95th percentile, meaning in the last 30 years, credit spreads have been better than today's levels only 5-6% of the times, which is
amazing,
ridiculous if you think about where there's a geopolitical risk, macro uncertainty, rate risk, all inflation, all these things. We're almost like in a world where all the building blocks of convertible bonds, you have an A plus, and then convertible investors have made good money this year. They still have more capital to deploy. It's a great time to issue converts. It's a great time for all the participants in the convertible market. And as you know, Tom had a baby 6 weeks ago. For her sake, I hope that this party continues for quite some time.
I know. She does too. She doesn't even know it. You study companies all the time and their cap structure. I'm sure you get into situations where you look at a company and say, oh my God, like they should be issuing a convert. It would be like so great for the flexibility and strength of their balance sheet. When you see something like that and a management team or board just doesn't consider it, or they're just like, they don't want to do that, why do you think that is?
I think there are a number of reasons. One is there is still a little bit of fear or worry around convertibles. It is a complex product. It's not as simple as selling stock and just getting a loan.
Yep.
But that's where we come in and we reduce the complexity and help the clients. I would also say that as much as converts have become mainstream, and as you know, converts have been in existence in the US capital markets for almost 2 centuries now. I mean, the US railroad boom was funded partially with convertible bonds. But nonetheless, equity investors need some hand holding, and that's another place where we shine. But yeah, the complexity is one of the reasons issuers tend to shy away sometimes from converts. And what we have seen, once you spend enough time with the clients, walk them through the nuances of a deal and walk them through the negatives. And there are negatives of converts that everyone should be aware of. And then we share some of the solutions to fix those negatives, or at least explain what those negatives are that are not fixable. Most of the clients say, wow, why wouldn't I do it?
Yeah.
But it is a pretty long education cycle for many of our clients. I joke that the longest I have started the process and then finally the client did a deal was more than 10 years.
I believe it. I totally believe it, Raj. Speaking of looking over the long term, let's not say 10 years, but let's just say the next 18 months. What happens to the convert market if rates stay the same or maybe slightly go up? Or what happens if the Fed is in a loosening cycle over the next year and a half?
Yeah, so I don't know that if rates stay where it is or slightly up or down, that changes our.
Does it change the perfect storm?
No, I'll tell you what will change the perfect storm. If the equity markets go down significantly, that would then change the attractiveness of a convertible bond to many of our clients. Now you can use hedges like capped calls, call spreads to increase the no dilution zone of a convertible significantly. And so even if stock is down 10%, perhaps it's not the end of the world. But if stock is down 20 or 30, if there's a real market correction, and given where the equity markets are, that's a fear I'm sure many of us have, that is going to be the biggest driver in terms of changing the direction of issuance volume. Rates go up, I think that will make converts more attractive just comparatively versus debt. Rates stay here, that's okay. Slightly down, that's fine too. And even spreads changing wouldn't be a big differentiator. Volatility is likely to come down. I mean, if you look at kind of that April stock move, that just significantly increased the past 100-day historical average volatility. That's going to slightly come down. I don't think it's going to change things that much. Perhaps your coupon goes up by 25 bits, perhaps it doesn't.
So what I've heard today is that if you're a CFO or the treasury group under a CFO, when you get a chance to raise capital on incredibly favorable terms in the perfect storm for convertible issuance, you might want to think about it.
100%. And Tom, what I say is, look, talking to us, it doesn't cost you anything.
Yeah.
Let us walk you through the pros and cons and what are some things that you might not like about our convertible. And one of the things we take a lot of pride in is when clients talk to us, we talk about the negatives of converts more than the positives. I say that, look, there are 10 people who will tell you all the good things. Let me tell you all the negatives. And if you can live with those, why not raise capital with a zero coupon?
That was Raj Imteaz, head of ICR Capital's Convertible and Equity Derivatives Advisory Group. Raj has advised on more than $125 billion in convert and equity derivative transactions, and his current team is really elite at taking management teams and boards through this process. Their expertise and access to the services from across ICR Capital also sets them apart and gives them a competitive advantage that translates into an incredible ROI for clients. We'll be sure to check back in on Raj in 2026 for another update on the convert market, but right now it is hot as a pistol. I'm Tom Ryan. We'll see you next time back in the arena.
References to specific stocks are not intended to be recommendations for specific trading behavior. Comments presented on this podcast are intended for informational and educational purposes only, and do not represent opinions or recommendations on whether to buy, sell, or hold shares of a particular stock. All investors are advised to conduct their own independent research into individual stocks before making a trading decision. In addition, investors are advised that past stock performance is no guarantee of future price performance.